Good evening, everyone. A very warm welcome to all the members on this webinar organized by Internal Audit Standards Board of ICI. I welcome all the members for sparing their valuable time for this webinar. We are very much honored that our worthy chairman, CA Charanjot Singh Nandaji, is with us, along with Vice Chairman CA Gyan Chandra Mishra ji. Our today's guest speakers are also with us to guide us. Today's topic of the webinar is building an effective internal audit in industry of insurance industry. Today's program is hosted by Jalandhar branch of NIRC of ICI. May I invite our chairperson, CA Shashi Bhushan ji, to give opening remarks. Over to you, Shashi sir.
Thank you so much. Respected Central Council member and Chairman of IASB of ICI, CA Charanjot Singh Nandaji, Central Council member and Vice Chairman of IASB of ICI, CA Gyan Chandra Mishra, and guest speakers as well as eminent personalities, CA SV Sundar Krishnan, CA Anil Malik Lal Agarwal, and CA Mayam Tandon. Good evening, everyone. I am honored to welcome you all on this webinar on internal audit for insurance industry. Internal Audit Standard Board of India, in the able leadership of CA Charanjot Singh Nandaji, is regularly organizing such programs for the updation of members. This might be a 3-hour program, but to organize it, to deliberate on any topic, or to coordinate everything is a continuous effort of so many days. And sole purpose of all these efforts is growth of the profession and of the members. So keeping it short, I welcome you all on the behalf of Jalandhar branch of ICI and IASB of ICI. Thank you so much. Over to CA Vijayta.
Thank you so much, sir. This webinar is conducted by Internal Audit Standard Boards of ICI, which is continuously organizing such programs for members and providing crucial financial updates for the help of members. The chairperson of Internal Audit Standard Board, CA Charanjot Nandaji, is with us, who doesn't need any introduction. He is well known for his great contributions as Central Council member. May I invite CA Charanjot Singh Nandaji to give keynote address and welcome address. Nanda sir, please.
Thanks a lot, Shweta ji, the chairman of Jalandhar branch, CA Shashi Bhushan, my very dear friend and co-speaker of the day, CA SV Sundar Krishnan, CA Mayam Tandon ji, Shivani Surbi, Ayaz from the technical team, and all participants have come here to go home all elected. Ladies and gentlemen, I wholeheartedly welcome you to today's webinar on building an effective internal audit insurance industry. I want to tell you that if you do analysis of the Indian insurance industry, you would find, first of all, that there is a robust demand of all variants, because there is growing interest in insurance among people. Innovative products are attracting them, and distribution channels are aiding growth, and therefore insurance industry has become a great place to venture into. There are attractive opportunities, strong growth potential for micro insurance, which again is a great motivator. I'm sorry, I have a bad throat. Policy support. COVID-19 insurance policy attracts foreign tourists, and going ahead, IRDA frame regulations are there for the sector. And we are seeing increased investments. Yes, life insurance industry in the country is expected to grow 12 to 15% annually over the next 3 to 5 years. Ladies and gentlemen, you need to understand how we as internal auditors could add value to ensure that the working of the insurance industry is seamless. We would also like to look into the legal requirements for internal audit in insurance industry. You are all aware that IRDA is the regulator with respect to the internal audit. You are aware with respect to the insurance industries. And therefore, you need to understand that IRDA essentially takes care and frames all regulations related to the working of insurance companies in India. And therefore, it becomes imperative that we start working in tandem to put things in the right perspective. Second thing, the role and importance of internal control systems and good risk management system is very integral in the insurance industry. And more importantly, introduction of mandatory quarterly internal audit for insurers is one such step which has boosted the role of internal audit in the internal audit of insurance sector. Putting things in a brief way, what are the role of internal audit in insurance sector? Number one, investment strategies. Yes, they need to be looked at a microscopic level by internal auditor. Operational resilience, very, very important. Insurance is an ever-growing, ever-changing industry. Therefore, operational resilience has to be taken care of. IT security assurance, very, very important. Everything is automized now. So IT security is one of the most important ingredients of internal audit and the assurance services which we provide. And finally, it is compliance requirements. So many compliances are there, and therefore putting that in the right phase would ultimately put things in the right esteem. We also have CA Mayank Tandon who would speak on reinsurance. So what are the risk areas in reinsurance to give as a keynote address only to touch that? Number one, process for entry into agreement with reinsurers. Very, very important. The agreement, the process, each thing has to be outlined. Underwriting guidelines on different limits. Again, an area where a lot of impetus is called by the internal auditors. The process of agreement and system upon launch of products. Again, the entire process variant needs to be defined. And more importantly, adherence to terms and conditions of the agreement and seeing that compliance is on the right track. Going ahead, process of placement of risk to the reinsurer. Risk is very important variant of internal audit. And you have to understand that risk essentially is a management perspective, but largely internal auditor has to see that proper risk mitigation is taken care of, and if risk comes from nowhere, it is mitigated. Process followed for reinsurance premium payment, because everything ultimately moves across the revenues which are created out of the entire arrangement, and recording of reinsurance premium in the books of account so that we are able to effectively look at the revenues which are being booked. Ladies and gentlemen, today is going to be a very exciting session. I see people of the eminence of Mr. Sundar and Mr. Tandon who would take us through the various nuances of insurance industry to put at rest all the doubts which you may have ushered over the years. So I want to thank both the speakers. I want to thank Jalandhar branch for recording this seminar, and all participants have come here to go home all right. Thank you. Thank you so much. Over to Madam Vijeta for her further proceedings.
Thank you so much. It's always been a pleasure listening to you, sir. Thank you so much. Before starting our technical session, we would like to convey that if any of the participants or have any queries during this session, you can write it in the chat box. The speakers will address those queries at the end of the webinar. Now, moving to the technical part, first session is our first speaker of the session is CASV Sundar Krishnan. He is the Chief Risk Officer, Reliance Nippon Life Insurance Company Limited since 2006. He has been leading several functions such as risk management, compliance, internal audit, claim, secretarial, mid-office management of investments of top companies. He is a chartered accountant, CISA, ERM, and CCSA checkpoint. He has given presentations on various national and international forums, and he has been awarded as Best CRO of the Year at various forums for use of analytical systems. He has been awarded as Best Professional of the Year award by ICAI. Today, he is going to be deliberate on this topic, governance in BFSI. Now, I invite CA Sundar Krishnan, sir, to give his deliberation. Over to you, sir. We would love to hear from you.
Many thanks. I think it's been a pleasure to speak in the CA Institute Forum. I particularly thank the ISB, Internal Standards Audit Board of ICAI, and also, of course, Nandaji, Vijayatyaji, and Shashi Bhushanji from Jalandhar for making this session interesting. And any person who wants to ask any question, can also ask in between if some part there is a information required or question required. I've kept my presentation very generic, and so I was really challenged or very delighted to hear Mr. Nanda on various aspects. He touched upon strategy, operational resilience, IT security, and compliance in the sector. Mind you, all these are very important and changing day by day. I can tell you day by day. Every day we get some exposure draft or some changes, which improves the importance of chartered accountants and internal auditors and risk managers in the sector. So to note or go technical in my session, it doesn't make sense because changes are too many. And the way things have changed is unbelievable. And I can tell you, importance of chartered accountants has improved a lot in the last few months or so. There's so many circulars which require chartered accountants' wisdom, knowledge, and experience. And same is the case with reinsurance. There are going to be a lot of changes there. And I guess Mr. CA Mayank Tandon would cover that. So I leave it to him, not touching reinsurance. And so let me share my presentation. Just open my presentation one second. Yeah. Are you able to see my screen?
Yes, sir. Yes, sir.
All right, great.
Continue, please.
So when we speak about governance in BFSI, what are we looking at? We're looking at establishment of policies and definition of framework, which is basically what would be the board, what would be the shareholder management, what would be the executive management, and how would policies get formulated. What would be the shareholder and owner strategies that is conveyed to the CEO or the board? The CEO, mind you, in insurance sector is also a board member by mandate, and either an executive director or an MD or a ED, depending on what the company wants him to do, him or her. And so we have policies that are drafted by the board and some kind of approval of the strategy, long-term, short-term, medium-term, and also processes that need to be approved are approved. And there is a identification of risks that happen through various forces, measurement of them, analysis of them, monitoring of them, and then risk mitigation. It was quite, again, delightful to hear Mr. Nanda speak about enterprise risk management. And that's an important part of the governance framework. The board of directors depend on the CRO or our inputs to understand what's happening in the company and give guidance and give their experience. So board reporting is very important. How do you report? Obviously, you can't. The board meetings are held quarterly once, and sometimes for strategies and planning, we have one more meeting. So generally, we have 5 to 6 meetings in a year, depending on challenges. And if there are challenges, of course, there will be more meetings. And so the board reporting is normally through the board reports that we send. And many times board members also participate in important committees. Like you have the claims committee where the board member is present. Sometimes you have the policyholders committee at executive level where a board member is present, and audit committee or control committee where the board member is present. This is the industry practice. And they get reports through these committees also. And also they get reports regularly from the management. Then there is a quality orientation in terms of GRC, governance, risk, and compliance. Compliance, mind you, is very heavy in BFSI. The regulators play a very important role. and drive governance, risk, and compliance in the industry. Be it be a bank, or be it be a mutual fund, or be it be an insurance company or insurance company, the kind of statutes, kind of roles, kind of changes that are taking place are amazing. And it's increasing day by day, both in terms of quantitative developments as well as qualitative developments. Then there is a quality assurance of the governance risk compliance process. If you are part of a large group, there is a group audit, group compliance, group risk, group legal, group security, group taxation, group finance, group HR that monitors, controls governance processes in a company. As well as there is regulatory monitoring in terms of inspections. There is also board monitoring in terms of reviews. And there is compliance monitoring, compliance review. There is also risk review, risk audit, internal audit, external audit, joint audits, and so many other audits. So these are very important processes and pillars of the governance. Then there is also consistency in group risk, group audit. You need to follow standards. You need to follow qualities. You need to follow processes. These are documented processes, very important to document, very important to have these manuals in place, because it's very easy to be abstract, very easy to be not to be documented, and hope that experienced personnel will manage. But experienced personnel go and come. I don't know how many of you are aware, last 2-3 years, the amount of exits that have happened from BFSI companies is amazing. It's just nightmarish, and it is one of the key risks that any BFSI company faces, be it be a bank or an insurance or a mutual fund. So there is a lot of exits, a lot of absenteeism, a lot of problems that BFSI companies face today to recruit right kind of quality of staff, and also a very important risk. There are a lot of independent reviews that happen, and there is a lot of audit control that happens through internal audit, external audits, process audit, statutory audit, inspection reviews, etc., etc., etc. And audits and reviews could be internal, could be external, could be through process. Internal also need not be internal to the company. Last 17 years, my company has outsourced the internal audit to separate firms. So there is a lot of outsourcing that happens for quality reasons, for major reasons. So that is also very important to understand. Then there is risk implementation, which is through risk identification first. You could map your process to standards, map your process to quality, map your process to compliance standards, do self-assessment. The self-assessment is a very important function. Mind you, the internal CXOs, the audit department heads under them, and the people who are managing the operational functions can better assess their functions than others, outsiders. And therefore, this calls for a lot of responsibility and maturity. To be honest in the work, it's very easy to put everything green and say everything is perfect and fine. And then you will find that when an inspection occurs, you get so many findings. So self-assessment, I would treat it as very important. And then you also need to capture losses, capture also near misses. This is very important for Basel. Near misses means there could be a process gap or a technical gap that can occur, and that may not eat you with a loss, but it could have cost you a very embarrassing reputational loss or a financial loss. It's very important to capture such events so that you do why analysis, which is called RCA, root cause analysis, and implement action for all the problems that are there. And one problem could have 6 actions. One could be an automation, one could be a manual check, one could be a review check, etc. And therefore, also it could mean recruit new people or consult chartered accountants who are experts and seek their guidance. So it's a very important area. And then, of course, the dashboards in KRIs, key risk indicators for a risk management person, analytics is like oxygen. It's all about data. You go to CEO or the board or any person without data, they'll just say that you're not so good or not good at all. Come with right kind of data. Mind you, the CXOs are far advanced in terms of data. And therefore, you have to be very careful when you approach them with some kind of comment or some kind of risk. You'll have to be really prepared on data front for the challenges that they would pose. Mind you, they are more knowledgeable of their area than you are. And therefore, when you give guidance, you'll have to be an expert or some kind of analysis that you would need to do to ensure that your words are respected, your comments are respected, and your conclusions are respected. And therefore, dashboards are very important. You could have a dashboard in terms of operational risk dashboard. You could have a dashboard in terms of a market risk dashboard. You could have a governance risk compliance process, people, technology. And these are very important for enterprise risk management. Then we come to mitigation, where you need to put in more processes in place, technology controls in place, business continuity planning in place, business security controls in place, put in quality assurance in place, a lot of do project assessments and readiness assessments. These are very, very important. So this is what the governance layer is. Of course, it's from a risk management orientation view. Then there is compliance risk assessment, compliance processes, compliance risk management, compliance review by independent person, and then compliance audit. Remember, before we encounter a regulatory audit, we internally inspect ourselves to find out where we are in each of the scope area. So you need to be very, very clear into what are your compliance standards and adhere to that. So compliance is very important. And you could get fined. These fines are fine. The financial fine could be less, but then your name gets published in newspaper. And so it's a very important area from a risk perspective, reputation risk perspective. Reputation risk is something you measure for each risk, financial risk as well as reputation risk. And so these are very important areas for a governance person, and especially for chartered accountants, because chartered accountants have been given this role of governing. Mind you, it's the president who's there in the board of the IRDAI, President of Chartered Accountants of India. And so very important role, and vice president is in some other committee, which is a key committee. So that's the kind of importance that is given to chartered accountants in the insurance sector, and so also in banking sector and mutual fund sector. And therefore, it is for us to play the roles that I mentioned from a governance perspective. The traditional roles of a chartered accountant were auditor, tax consultancy, legal consultancy, tax, corporate law specialization, information systems, function, audit, risk management, foreign exchange expertise, markets expertise. And as a practicing professional or in the capacity of employment, you also do BPO and outsourcing and academics and mentoring. These have become now traditional roles. So what are the modern roles? Companies have shifted from informal policies to formal policies, financial risk to technical business risk, several dashboards in each of the risk area, limited oversight to senior level oversight, reactive to anticipate, prevent and monitor, fragmented approach to focused and coordinated approach, limited involvement to everyone is involved, people orientation to process orientation, and ad hoc management to continuous activity or continuous monitoring or some kind of analytics monitoring. So these are the changes that have occurred in the last 20 years or 10 years. And again, chartered accountants have a very, very important role to play in each of these. Information security was mentioned. So that's an important area. Application security review is something a CA can better do than a specialist, because you need to have lots of functional knowledge in application security review, apart from the technical application security review, where you map to standards, guidelines. Then there is a network security review. This is a bit technical. So DSAS are expected to perform this. You need to perform network review of firewalls, network review of IDS, IPS, of SIEM, and various other components and layers. Now, of course, we are going beyond perimeter. And so you need to perform that. Then there is telecommunication security review. Again, expertise, again, technical. Again, you need a DISA. You need to be experienced. You need to come up with what are the problems in the WAN analyzer, wireless analyzer, communication area, VSAT, etc., etc. IT governance review, how do you run the company in terms of standards, in terms of processes, in terms of people, in terms of system support you have? How do you manage that? What are the dashboards you get? How do you mingle with business? Because IT cannot be separate from business. If business develops business strategy, IT develops IT strategy. IT strategy has to be developed from business strategy. And the recent trend is business develops IT strategy. And therefore, if IT governance is not towards IT strategy developed by business, you have an issue there, because then IT will be in its own world, in its own sphere, probably in next century, but business is not caught up with, then you have a problem. But that's not so the case in BFSI. Businesses today are far advanced, far IT enabled, and very IT savvy. So you need to be with them when you develop IT strategy, IT standards, IT security guidelines, IT processes, IT audit, etc. IT management review, again, independent review of IT management, very important area. Again, chartered accountants have a very important role to play in all of these. Again, so the internal auditor's role is emerging now. You're not looked at only at internal audits, only in the plans, only in execution of the board approved plan. You're also involved in business plan development. Any new process that comes, any new system that is developed, internal auditor has to give his or her experience and advice, and also support. So this is key area. Of course, this goes without compromising independence. You would say, I've given suggestion in terms of process, I've given suggestion in terms of system. How do I come back and audit that? Where is my independence? So you'll have to manage that very carefully. How do you give suggestions? How do you give support? And when you do that, you need to say, look, I have suggested this, but it is your responsibility to understand what needs to be implemented. And I have a right to question it later. This is very tough, but you need to do that. This is very important area. Participation in systems development. Again, it's better to approach a new system much in advance in the requirement stage, audit of requirements, in the system analysis stage, audit of the system analysis portion, audit of the architecture, and then pre-implementation review, implementation review, and then post-implementation review. Why this is important? Because when you come to audit after 3 years or 4 years of the systems, or after a year of the systems, it's very difficult to fix the gaps later. It's very expensive, very complex, and time consuming. And also the costs could be humongous. I remember one of the system that was developed in the bank. I used to be in the bank. And they said, despite Sundar Krishnan's objections, we are going ahead. And they went ahead. And the system posed crores and crores of losses for 2 years to go. And there were special projects. People from abroad had come for many, many mandates or months together to look at the system problem. The system was dollar-based system, so it created lots of complexities, lots of reconciliations to be done between the dollar-based entries and the rupee-based entries. So you would have a problem. So there are no shortcuts in the world. You need to be disciplined. You need to respect the chartered accountant who gives the advice. You need to understand his or her experience and then go according to the plan. Evaluation of IT business process. Many times systems, there are a lot of, going back to the previous topic, many times the systems get delayed implementation. But that's very common in the world. I have yet to see any project being implemented on time. I was part of 2 or 3 projects in the banks, and my boss was very proud that we implemented the system on time. But this rarely happens. Maybe 20% of the time, 80% of the time I've seen in my last 40 years or so, the system development is always delayed. But it doesn't matter. If you fix the gaps well, if you address all the points well, you save lots of time and money later. And therefore, it's very important. Again, IT business process, any new process, we need to seek advice of the internal auditor. and ensure that it complies with the norms of the regulator, it complies with the norms of the company, norms of standards of the company. And mind you, the norms and standards of the company are far more disciplined than the regulator's minimum requirement anyway. And this is key. There might be an argument, there is no regulatory risk, why you are insisting on this? But it's not that you look at only at regulatory risk, you also look at operational excellence. You also look at operational resilience. You also look at what is the role of the system, process, and people in future. When you look at process, you don't look at process isolation. You look at process along with systems and people. Is there a process? Is there a person? Is there a tool? No process today gets implemented without an automation or without a tool. However, very rarely, unless it's a review process at a very high level. Then there is facilitation that you need to do, training, advice, counseling, controls that need to be implemented. And as I said earlier, every check could have 6-7 controls. And therefore, you would have a function, sub-function, process, sub-process. Sub-process would have risks. Risks would have many controls. Many controls would have far more many checks that need to be done by an auditor. And each of those checks need to be tested. And then look at best practices in the industry, compare, do dashboards with industry. If you come up with the internal audit command, it's very important to also understand what other companies do in the industry, benchmark, and then give your comment. You would also need to partner sometimes the strategic business unit, partner sometimes HR, partner sometimes legal, partner sometimes risk. This is key and very important. And when you partner, you are not normally giving suggestion, advice, guidance on process, people, and technology. But again, very important to highlight independence of your function. Be careful what you advise, because also you need to stipulate, look, I'm giving you advice, but later on again, I'll come and check whatever I'm advised also. So take care. My advice is my advice, but your responsibility is your responsibility. And of course, you are accountable. And therefore, you need to be careful when you evaluate advices, suggestions of auditors. But at the same time, these are very important because proactiveness is very important. Involvement is very important. And later on, you come up with an audit comment, which is, very expensive to implement after a delay or a time gap. And that's the reason why this is the change that has come in the industry, especially in BFSI, because of the digital change, because of the customer orientation, because of the technology orientation, because of the emerging regulations that have come and complexities that have come. And therefore, partnering, advice, facilitation, participation are very important these days. And you need to budget time and resource for that. Inventory of corporate IT assets again. How many laptops are there, desktops are there, ports are there, everything. These are very important, because you will suddenly find somebody coming with some device to the company and also getting connected. Idea is to enable freedom, idea is to enable internet, but at the same time, security is very important. Information security, privacy, all are very important. A person cannot simply come with some tool and can get connected without necessary articulation of the security review and security systems. NPR, new process review again, which I explained in evaluation of IT business process. When you evaluate IT business process, you do a gap analysis and then come up with an audit comment or a review comment. When you do NPR, it's more beginning stages. It's a new process that comes, new innovation that comes, which you need to examine. And therefore, industry exposure is key in NPR. But NPR is very important. So any matured company, matured BFSI company always involves auditors, risk managers, processors, functionaries beforehand, at this beforehand stage than later. Of course, later also you need audits, reviews, inspections, comments, reviews, etc. But earlier, the better. All this, of course, without compromising independence of the internal auditor. And then there are very important roles that insurance sector has given for chartered accountants. They are involved in business planning, budgets, forecast. I remember one of the CEO joined, he came up with 38 business plan number 38, plan number 37, plan number 36. That's the kind of budgeting that happens. That's the kind of planning that happens annually. I'm not talking about a long-term plan. Of course, you do long-term plan every year, rolling long-term plan, rolling forecast. Having said that, you also need to do an annual plan. These are reviewed by a regulator, submitted to regulator. Therefore, this is very important. The chief financial officers of all BFSI companies are chartered accountants by choice, by mandate. Actuaries are also chartered accountants. Many actuaries are chartered accountants. And the actuaries who are chartered accountants, they have a far more effective role to play. Chartered accountants are involved in systems development. They play a lead role. They play a project management role. They play internal audit role. They play quality assurance role. They play quality checks. They do risk reviews. They evaluate business processes. They do facilitation in terms of counseling, training, guidance. They do a control review, gap analysis and controls. They do a best practices approach, both limited and exhaustive reviews. They do partnering with SBU, strategic business units, HR, legal, risk management. When you do partnering, it's very important to highlight what you do, articulate what you do, involve industry benchmarks, involve dashboards, do several kinds of researches so that your advice is sound and respected. NPR, again, new process review, innovation review, checks at the initial stage. And there are far more business opportunities for chartered accountants in practice. There's so many areas that I would need to maybe spend hours and hours to say this is where a chartered accountant plays a role. So that's the kind of emerging role that chartered accountants have to play in insurance sector and also in mutual fund and banks, actually. And so in the digital era, a chartered accountant plays the role of planning, CFO, participation, the same thing that I mentioned earlier. The other important areas are outsourcing now. Many things are outsourced because there is shortage of staff in the industry. And therefore, it requires a lot of specialization. And chartered accountants who are specialists do really well in their spheres. Forensic, again, is very important. It's very important for auditing businesses. Again, digital discovery. Digital discovery is a process where when you submit something digital to the court, you need to go through a process of digital discovery, wherein you use a tool to get the data out of the systems as it is without it being tampered and present the same to the lawyers. This is a very important area. And again, chartered accountants are involved in this, especially who have knowledge of forensics and audit. So my advice to you is sharpen your saw all the time, adapt to all pitches. It is T20 time. You've got to be smarter. You've got to be collaborative. You've got to be proactive. You've got to be systems oriented, knowledge oriented, dashboard oriented, and you need to connect well, collaborate better. Be smarter, not necessarily hardworking. Grab opportunities, especially if you're in business or means you're in practice. Look at the big picture that emerges amidst all disruption. You'll have so many disruptions being called digital disruption, technological disruption. These are words. Look at the big picture. And I can see a lot more opportunities, a lot more areas to stress upon, specialize upon so that you can contribute better. Use of data and analytics in all aspects of life. Use Google to the maximum extent possible. There is tremendous outsourcing in the industry now, thanks to a lot of people leaving BFSI units. So that's it from me. I've got some time for questioning. So if you have any questions, most important to raise them, and then I can probably solve that. There is some 5 minutes left or 6 minutes left.
There are 2-3 questions in the chat box.
Sure.
I'll read it one by one.
Sure.
So first is, what were the major challenges thrown up by COVID-19 in terms of
Madam?
In terms of exponential increase in life.
Sorry, in terms of?
Exponential increase in life. It's wrong drafted, I guess. What were the major challenges thrown up by COVID-19 in terms of exponential? I guess यहाँ पे decrease होना चाहिए था. Decrease in life.
Or increase in insurance claims. Maybe.
Yes.
Yeah. Very, very nice question. COVID did throw lots of challenges. Suddenly, we had to embark upon people working from home, and security was challenged a lot. We had to buy tools. We bought some specialized tools so that people can work from home. This was quite nightmarish at that time. We had to put desktops and laptops in cars and taxis and autos so that people can take them home. We had to ensure that the desktops, laptops are hardened before they take it home. When you say hardening, you mean you have to run tools and things like that, and make lots of process and systems changes. Mind you, regulator was after us to understand what changes in process and systems we are doing, whether we have presented the same to the board. We did that, and then we presented that to the regulator. And therefore, there were a lot of reviews that were done, checks that were done. There were lots of process relaxations that were done, a lot of system relaxations that were done, but each were mitigated by compensating controls in terms of new tools, new process, new technology, new reviews. We used to have meetings every day to look at the new risks that emerged. Of course, we don't know how long the COVID will last, how bad it would be. All the global reports were terrible. They used to throw a very dismal story to us, but we kept batting in tough wickets. And now to your specific question, yes, claims increased a lot. So we had to create claim reserves, special claim reserves for COVID. But I can tell you today, the reserves that we created for far more than what actual claims were, despite the fact that the claims had more than doubled in those 2 years. And of course, we are looking at a huge area. Having said that, we were still profitable in those 2 years. We have profitably ran for 5-6 years. So we will continue to be run profitably forever. But, managing COVID claim was very, very important. And it was very scary. It's not easy, of course. And we had to pay, and then paying claims was very important in insurance. So we had paid 99.999% of COVID claims. The 1 or 2 COVID claims that we didn't pay were terribly fraudulent. And so we could have evidence to say that there was no COVID death, or the COVID death happened, but the guy was never insured before. The person was never insured. So this was the case. And even otherwise, our claim payment is like 98-99%. And the balance is the fraud element. There's a lot of frauds that happen in insurance sector. And there are racketeers that operate in insurance sector. If the annual fraud budget or the fraud expenses or fraud costs go about 30,000 crores per year in the insurance sector alone. So these could be people with serious diseases, knowing deliberately that they have the disease still. When we are asked questions that do you have this disease, they will say, no, we don't ask, we don't have. They will declare that they don't have any disease, and yet they claim insurance later. Now, that's a fraud for us. And non-disclosure of critical illnesses or diseases, even when knowing that they have. And being asked, if they are not asked, it's not a fraud. But when you're asked and when you don't report, that's a problem. And of course, you take an insurance policy. Again, of course, the regulator changed this to make it 3 years. So if the person managed to live for 3 years, then we have to pay the claim. So that's the story on the insurance claim increase in the COVID era. And every company in the industry suffered, including reinsurance companies. And of course, models were tested. but we did come up with advanced models, COVID-related models, and of course created COVID reserves to face the problem. I think that's the answer to the
Okay,
question.
sir. Yes, sir. Yes, sir. Yes, sir. So next question is, can you elaborate more on the NPR, new process review? Are there any guidelines given for NPR by ICI or any other agencies, domestic or international? I think it's,
Yeah, I understand what you're saying.
yeah.
So I think NPR, new process review, is a very important process that I learned when I used to work with multinationals. In fact, this is the first company. Now, of course, this company is multinational. We are half Japanese and half Indian. But before that, I used to work with fully multinational companies. And it's a multinational term, NPR, new process review. And I learned this in Merrill Lynch, actually. They have a very, very systematic NPR process. And now, of course, Bank of America has taken over them, and they do also have. Most multinational companies have NPR process in place. The reason why we have an NPR process is it's because of the risk that you run to plug the gaps and the errors and risk later. And thus ICI, of course, ICI has some guidance on this in terms of research papers, in terms of guidelines, in terms of articles in various magazines. And the terminology can differ. You don't need to call it NPR. It could also mean new process review. In some companies, it will be called differently. Any matured company would have this in some form or other. And maybe in the Indian companies, you have it more informally, wherein the auditor is asked in a meeting or have you examined this? We are implementing a new project or a new system or a new process. Have you seen this? Have you taken comments from the auditor or risk? This is a normal question that a CEO will ask the implementer. And an auditor or an internal auditor or a risk manager is involved always, especially in BFSI. If you don't do that, it's a problem. It's nightmarish.
Okay, sir. Sir, next question is, the scope for outsourcing was touched upon in your slide. Could you please elaborate more on this?
Yeah,
The
very,
scope
very,
of outsourcing.
very good question.
Yeah.
I think
What are all the key areas of such outsourcing in building an effective internal audit in the insurance industries? As we like the focus, so to say on such outsourcing through it is a buzzword. It's continuation. Should I repeat it, sir?
No, I understood. Right. Okay. Very important question. And I really appreciate all the three questions. All the three questions were brilliant. The outsourcing has become very important now. As I mentioned, more so because of shortage of staff in BFSI. The kind of resignation waves that are occurring, nothing to do with moonlighting in the IT industry. It's more intrinsic and changes that are occurring because of digital disruption. Almost every matured BFSI company has involved in a digital transformation last 8 years or so, or 6 years or so. And so this has created a lot more skill gaps. There is a lot more functional gaps also these days, where an important person leaves the function and then there is a replacement to be done. And so if you are a chartered accountant who can offer these services, I know many companies that are there in the market which offer CFO services, which offer accounting services, taxation service, GST service, forensic service, information systems review, audit, QA, quality assurance, QC, quality control, testing. All these are run by chartered accountants in the industry today. And these are the areas that company would like to outsource to internal auditor also, if internal auditor has the specialization in these areas. And there is a demand. And internal auditor has to display that, articulate that knowledge. And obviously, it would be a separate assignment and chargeable separately. And it's not part of the internal audit fees. And of course, you will not lose independence because somebody else would come and implement and somebody else would be the auditors in the company. And that's the way you handle it. And so that independence is not lost. I think I
Okay.
answered the question. Yeah.
Yes, sir. Yes, sir. Moving to next question. Sir, next question is how can we benefit from outsourcing plans of insurance companies from practice point of view? What are the eligibility requirements?
Yeah, actually, I answered that.
Yes, sir.
These are the practice areas: finance, taxation, forensic,
Yes, sir.
process review, system review, compliance review. There are many chartered accountants who do compliance
Right, sir.
reviews. I outsource my compliance review. So there are lots and lots of areas. And if you're an actuary, even more. So I know of a CA who's an actuary who does a lot of work in my company, product reviews. The product reviews are extremely important in insurance sector. A product needs to be reviewed thoroughly for 30 years. Means I have to do T+1, T+2, T+3, T+4, T+5, T+30, T+25, T+20, T+30, which means in the 30th year, if I have to pay back the money of the customer, how do I pay? What do I do? What is the system gap? What are the system requirements? Are the system requirements already input, embedded in the systems? Is what you need to check and certify to the company. This is done by chartered accountants or actuaries. And this is very, very important because I have to certify based on that certification to the regulator, saying that yes, there is system and process in place. It was not done earlier. People used to take care of only the first year. But later on, what happens is the people leave. And the people who develop the product is different. People who are there are different. They can never understand how and why the product was developed that way. Because you need to be part of the several product meetings that happen. And if you're not aware of the product intricacies for the 30th year, 29th year, 25th year, or I'm just giving an example. It's a 30-year product. Products could be 10-year also, 7-year also, 5-year also, 1 year also. And so it is very important to understand product cycles across the product life and examine them through a chartered accountant much in advance.
Okay,
In fact, before implementation.
thank you, sir. Sir, next question is in spite of earning of profits, shareholders are not paid and value is decreased a lot. Any views on this?
Yeah, this is key. Therefore, shareholders should not look at top line only or persistency alone. Persistency means in a life insurance company, the premiums are paid again and again. Even in general insurance, health insurance, also they track persistency, renewal premiums being paid. If the customers do not pay renewal premium for 6 or 7 years, then the insurance company can go at a loss. And therefore, shareholders need to look at it. And therefore, insurance engagement for a owner or a shareholder is long term. It's not short term. And you need to have really a 10-year view to understand where your valuation will be. And you need to be really qualitative in your approach to insurance industry. You can't be fast. You can't be saying, "Mujhe paisa itna chahiye," nahi hoga aisa. And therefore, you need to be clear of valuation. There is something called embedded value. This embedded value is disclosed in the annual report. And embedded value needs to be marketed, needs to be reviewed, needs to be independently checked every year. And you need to ensure embedded value increases and not decreases. If embedded value comes down, that means it's a disaster. So just top line increase, profit increase, renewal increase doesn't hold good for an insurance sector or an insurance company. You must look at embedded value creation. You must look at what valuation is there very carefully, very, very strategically, and engage consultants, advisors, specialists, independent of the management, so that you are in control of the bottom line, top line, medium line, and more importantly, the valuation line.
Sir, moving to the next question. The question is whether audit of insurance will be given only to those who have done DIRM course of the ICI?
Not really at all.
Okay.
Courses are very helpful, very advantageous, very useful. Chartered accountants should attend these courses because these are good. And the people who come there to teach are experienced and very good. Having said that, we don't look at only that in practice. It's very important that we get away out of this mandatory mentality. ये मुझे चाहिए concurrent audit को mandate करो, law में regulator से मनवाओ, नहीं होता है. We are in the valuation world today. You need to add value as CA, and company needs to see value in what you add. You can't force everything. Of course, audits need to be mandated, very important. But beyond that, mandating everything is very tough. So if you put a mandate saying no, only people who are done this course can do insurance sector, no, not at all. And industry also doesn't see this. Definitely, if there is a person with A and person with B, the A chartered accountant has done the course and B chartered accountant has not done the course, there will be more value given to the A chartered accountant who has done the course. In comparisons, these things help. Otherwise, it can't be a mandate.
Okay, sir. Thank you so much. So next question is, in actuarial calculations, as mentioned by we as CAs blindly follow the figures without any verification. Is there any method to counter check? Please explain.
Sorry, I didn't understand the first part of the question. Can you repeat it?
In actuarial calculations, as mentioned by you, as we as CAs blindly follow the figures without any verification.
My God. Blindly follow any figures. God save you.
Yes, sir.
So, yeah.
Is there any method to counter check?
Obviously, you have to understand how it's created. You need to question the actuary.
Yeah.
And actuary needs to explain to you in a simple language. And I can tell you, chartered accountants are best in position to understand actuarial. There's nothing great about actuarial calculation. I think in financial management, we do learn lots of techniques in terms of IRRs and in terms of yield calculations. And I think a chartered accountant is technically equipped to ask the right questions and get the right answers from actuary. Please do not blindly follow whatever is imposed by the chartered accountant.
Yes, sir. So in continuation to this question, the same person is questioning, in this digital era, are there any specifics for this insurance industry? If so, could you please elaborate?
Are there
any specifics for this insurance industries?
So in a digital transformation, if you do not understand how do you perform a digital review, digital audit, and digital security review, implementation review, it would be an issue. So you need to be expert in systems, understanding what's happening in the digital transformation world, understand what's happening to the processes and tools used, maybe learn forensics, courses of forensics. This will really help you. And also understand the IT Act inside out to know what are the requirements of IT Act and how do you comply with it. Many times what happens is because of speed, there is the non-compliance to some of the processes and requirements of the IT Act.
Okay, sir. Okay. So the next question is, are the challenges different to a long-term insurance audit versus short-term insurance?
Yeah.
Are the challenges? Yeah.
Are there? Sorry.
Are the challenges different to a long-term insurer audit versus short-term insurer?
I don't know if there is anybody called a short-term insurer.
Yes, sir.
Insurance business is all about long-term. Yes. You are an internal auditor. Ensure you have a 3-year audit plan in place. But if you are hired only for a year, you still present a 3-year audit plan and say, this first year I will do audit of critical things, and then be clear of what you're going to audit. It's very easy to get everything audited in a year, but not possible to actually implement it because of the complexities involved. And there is nothing called a short-term insurer and a long-term insurer. Every insurer is long-term. Yes. Stress is on the valuation, stress is on techniques, stress is on long-term. And an insurance company strikes profit only after 5 to 8 years. It takes about 7-8 years to strike profit. If you strike profit much before that, if you are in the general insurance business, not in the life insurance business, it's possible. But otherwise, it's not possible because of the complexities and technicalities involved. For instance, if you sell a single premium policy, it's not cost effective for an insurance company. So you need to arrive at a level and then do marginal costing and do a marginal review and then sell a single premium policy. So you need to be at a level for that.
Okay. Okay.
Therefore, regular premium is what needs to be sold in a life insurance business. And as I mentioned earlier, 6 to 7 years is when you make profit.
Okay, sir. Hope it's answered clearly. Sir, why next question? It would be the last question for you. Why, after so many internal audits, companies going into liquidation? What is the use of internal audit?
Companies going on liquidation, I
Yes, sir.
don't
Going
know.
into liquidation.
There are 24 life insurance and so many general insurance. I don't think anybody has gone to liquidation yet.
It must be
This
a
is,
point of view.
yeah.
Yes.
So internal auditors are doing a good role,
Okay.
very respected. So don't be under that impression that people are going for liquidation.
Okay.
Yeah, companies might be sold, might be bought, might be merged, might be hired. Company X might buy company Y, and that's part of the process. Every company in the world goes through this, and so there is no. This is, happens more due to shareholder change rather than the company change. Even the companies that were sold were very good companies. So nobody is uh, liquidated today. Yes, but there are problems. There are problems the insurance industry faces. It's not an easy industry. It's a tough industry. You need to be really challenged. You need to be really articulated well. There are people who do short-term business, as somebody said. There are short-term goals of CEOs. But all these are being changed at this junction. Regulator is looking at even CEO goals and questioning them. They want to ensure that the CEO goals are long-term and not short-term.
Okay, sir.
So
Okay.
it's not easy anymore. Industry was immature. The private sector I'm speaking of. Maybe it started in 2001. Now it's 22, it's 21. So teenage is over now. And the industry is maturing as we speak. Nowadays, it's not only people do not look at only the revenues, they look at persistency, they look at valuation. And so things have changed.
Okay, sir. Okay, sir, more questions are pouring in actually. I'll be taking one last. Betty claim insurance is short term. That's a question mark.
Sorry?
Betty claim. BEDI claim insurance is short term or long term?
Biding?
Yes, sir. BEDIC claim next.
BED high?
BEDICLAIM. Betty claim insurance is short term or long term?
Oh, sorry. I didn't get the
Yes.
question. Okay. Mediclaim insurance
Yes, sir.
depends on the industry. There are products that are 1 year, there are products that are 5 year, there are products that are more. So when you look at Mediclaim or health insurance policies, it's normally a long term. It's not short term, but there are policies with 1 year view also that's being launched. That is short term. And therefore, do you make concessions in the underwriting? No, underwriting needs to be strict. And generally, term policies or health policies need to have medical checks being done, and these medical checks need to be properly done. At least I bought policies from private insurers, 2 or 3, where I had to go undergo medical examination thoroughly. No concession is given, even if you whatsoever company you are or whatsoever health you have. And so that's very important.
Okay.
And therefore, it is long term. It's not short term normally. But there are lots of products and policies which are short term.
Okay, sir. Okay. Sir, there are 2 more questions. If you allow me to.
Yeah, no problem.
Okay. What can be changed in the current internal audit insurance checklist, or if sir can provide his own checklist?
That's the most disastrous thing. Go with a checklist.
Yes,
checklists
sir.
are important. Tools are important. Standards are important. Oh my God. I'm there, right? Yeah.
Sorry. Okay, sir. Next.
So, no, but having said that, you need to develop the checklist also. It's not that you don't have a checklist, but you need to upgrade it every time with the recent processes, recent changes in tools and technologies in the insurance company.
Okay, sir. Okay. Moving to the next. Many times disputes arise between claims versus payments. Are there any standard practices that are clearly understood by the insurers to avoid this paradigm?
No, so disputes always arise because the products are complex. It's not simple. Many times what happens is the policyholder is in his own world or her own world. where they think that insurance company is to cover every single risk. They don't read the policy document carefully. They don't read the sales brochure carefully. And if you read sales brochure and policy document carefully, such disputes will not come. Unless, of course, there is a fraudulent motive. Then, of course, you could always have disputes. So that's the background.
Okay.
So companies are simplifying these. We are doing video checks. We are doing voice checks. We call the customer. When the company calls the customer needs to be patient and understand what the questions are and answer it honestly. If they do not, then they have a problem because it's a recorded call. And so if you go by the seller, and seller will say seller wants to sell and earn the commission. And therefore, you just go blindly by the seller, then you have a problem in hand. So you need to be clear what is your objective of seeking the insurance, and you need to be honest with every fact.
Okay. Okay. Thank you so much, sir. That was the last question for you.
Thank you.
It was very enlightening session. Thank you so much, sir. It was full of knowledge. Now moving to the next session. Our next speaker of the day is CA Anil Maniklal Agarwal, sir. He is the head legal and chief compliance officer. Hello, sir. Hello, sir. Chief Compliance Officer, Magma HDI, General Insurance Company Limited. Mr. Anil Agarwal, sir, is a chartered accountant with 20 years plus professional experience. The majority of his professional experience is in the area of insurance, compliance, and fraud control. He has worked in the companies like Future General India Life Insurance Company Limited, Again Life, ICICI Prudential Life, and Birla Sun Life. At Again Life and Birla Sun Life, he was part of the compliance function and fraud control department from the time these companies started their operations. He has detailed and good understanding of IRDAI regulations and compliance requirements. Now I invite CA Anil Agarwal, sir, to give his deliberation on the topic compliance in insurance sector. Over to you, CA, sir.
Hi, ma'am. Thanks for the introduction. Very much appreciate that. To start with, sorry, I lost my PPT, so I just start my deliberation verbally on this. I hope I am audible clearly.
Yes, sir. Yes, sir.
Okay.
You can start now.
Just to start about insurance sector, basically, just to give a background, insurance industry per se started its operations in the year 2001. IRDA was formed in the year 99. And these regulations came in force. So basically, insurance industry is governed by IRDA. IRDA full form is Insurance Regulatory Development Authority. Though, as we read, the mandate for the authority is to regulate, develop, and ensure the orderly growth of the industry as a whole. IRDA regulates both life, non-life, and health industry. So basically, there are three classes of industries. There is a health industry, there is a life insurance, and there is a general insurance. These are the three classifications of the line of business of the IRDA. Now, IRDA per se, every insurance company is governed by three sets of this thing. One is Insurance Act 1938 as amended. Second is Insurance Rules. And third is all regulations, circulars, notification that has been issued by the IRDA from time to time. The Act, which is passed by the Parliament, rule obviously the subset of the Act, and the regulations, guidelines, everything issued by the authority from time to time, depending on the phase the insurance industry is in. That is about regulations. I say there are around, to be very precise, around 53, 54 regulations issued by authority till date on various subjects, which governs which governs all the three line of business, like health, life, non-life, that is general insurance. But the better thing nowadays it's happening with IRDA is they are issuing master circulars, like RBI, Reserve Bank of India, they are issuing master circulars, wherein suppose IRDA has issued different circulars over a different period of time on a particular subject. For example, if I take anti-money laundering, so it has issued a master circular very lately, like on 1st of August, implemented extension is given, wherein all the earlier circulars are combined into one master circular, and that has been rolled out. So that is a better development that is happening as far as authority is concerned. So they are compiling all the regulations. And today, if I see to what IRD authority is doing, is they're trying to relook at the complete regulations from the new perspective, making regulations more pragmatic, more industry friendly, and more acceptable in the sense that will help increase the penetration of insurance across India. Because today also insurance industry is facing the penetration issues. It has still not gone to that class B cities, C city or D cities where it should go, and it should become as simple like any other investment product or any other retail mortgage product. So to increase the penetration, IRDA with help of the industry is revamping the entire laws, regulations, acts. It's making all the required changes and trying to see that the penetration increases to a certain level. Okay, now coming from the compliance perspective, already a role of chief compliance officer who is responsible for ensuring compliance that see IRDA basically, if you see, insurance is an highly regulated industry. Unlike banks, like mutual funds, IRDA has to ensure that insurance industry has to comply with all the retail norms of all the stated regulations. The only reason being the insurance industry deals with the public money, and when you are dealing with the public money, it has to be properly ring fenced. One of the very sweet things one better things I would like to appreciate about IRDA was like, unlike in earlier years, about before Corona, there was a lot of toxic asset that had gone. Public money had gone waste because of certain companies going bankrupt. But that was not the case as far as insurance industry was concerned. That was possible because the system per se of the investment side of the IRDA and the insurance company was so strong that it never allowed the assets of the investments of the shareholders, the policyholders' money become toxic. There may be a few cases here and there, but if I look at the overall impact, it's not even 1%. It's that impact is in fractions, given the size of funds that has been managed by the insurance industry per se. So that is how it is ring fenced. Now, the topic given to me is about ensuring compliance. The CG guidelines, the corporate governance guidelines, institutes the basic governance structure for any insurance company. The corporate governance guidelines defines what are the mandatory committees that the board should have. It basically details the mandate for the board. It details the mandate for the mandatory committees. It details about non-mandatory committees. It details the expectations of what an appointed actuary or who are the critical key management person positions. Now, very simple thing. It states that an MD CEO position has to be pre-approved by the authority. Like my good friend Mr. Sundar was also saying that authority looks at the long-term view of any person who becomes an MD and CEO. So any person who becomes an MD and CEO, his appointment is subject to approval by the authority. So detailed due diligence that happens. Even a simple, even at the start of the year, we have to file the business plan, the complete detail about MD CEO remuneration with the authority. That has to be approved by the authority. Post approval only we can make the payment for the year to the MD CEO. Means even the payouts that are being made to the MD and CEO of the company who runs the business are to be approved by the authority. This why I'm saying is to bring how regulated and how sharp authority is as far as looking at each and every component. Now, every key person positions also, if you see, that has to be informed to the authority within 30 days of the appointment or resignation. And all key person position can be kept vacant only up to 180 days. Someone has to come and fill the key person position. So that is how the entire focus of the chief compliance officer, it gets its strength from the corporate governance guidelines. Now, what are the activities normally a chief compliance officer has to perform in an insurance company? It has to ensure that the company processes, company are in line with the applicable norms. Second thing, it has to ensure that whenever businesses are being done, the business strategies that are being framed by the company are as per the are within the framework as specified by the regulators. For example, company should not be engaged into mis-selling activities. Like the IRD has very much defined that who can be sell insurance policies. The person who can sell insurance policies have to be have to undergo training. He has to pass the exams, and then only he is eligible to sell. So they have defined who can sell. Like individual agents are there. Then there is intermediaries. Intermediaries are got multiple classification. Like you have got broker, you have got corporate agent, you have got insurance marketing firm, etc. Now, even there are limitations like broker can deal with a number of companies, corporate agent can deal with only 3 life insurance, 3 non-life, and 3 health. New regulations are coming, which 3 would increase to 9. IMF can only operate for a particular set of people. It's only deal with 2 life, 2 GI, and 2 non-life. So those restrictions have been put in place. Even company has to ensure, and there are host of do's and don'ts as far as for each intermediary. Like they have to ensure that the broker or the corporate agent has to ensure compliance of their code of conduct, of their mandates. So there are even lot of reporting requirements that happens. So whatever returns that are being filed with the authority, compliance officer has to ensure that all the returns, the information that is being submitted to the authority are proper, they are properly reconciled, they match with your annual statements. The information submitted are factual. There is nothing that goes wrong, because if there is something that goes off, then it can create a lot of issues. Even that has also a problem as far as reporting is concerned. Third and very foremost thing is like the chief compliance officer has to give a mandate to the board and assurance to the board that company is in compliance with the mandated norms. So how does it ensure that they are in compliance with the mandated norms? So there are 2 types of. One is the tick box item, wherein insurance companies, the chief compliance officer has a tool of called a compliance certification process, wherein it has listed all the rules and regulations department wise. So this is normally and tech enabled self certification process, wherein the HOD of the company of each department has to go through the each and every regulation, ensure that this regulations are being followed in their department, and support his assurance through evidences, so that it becomes. So based on that analysis, uh, analysis and evidences provided, uh, a chief compliance officer does a high view review of compliances and makes his own analysis, and then submits that assurances to the board. One more better tool for the chief compliance officer to do is compliance testing. Now, what is compliance testing? Compliance testing is something very similar to the internal audit, I would say. Internal audit is no doubt a third line of defense, and then risk is second line of defense, and compliance is first line of defense. If you see the in the order of governance process or the validation process. So compliance testing becomes an important part of the entire compliance governance framework. Now, why it is very important, even I would draw a reference to the RBI circular, wherein RBI has issued a circular in relation to chief compliance officer, and in very much terms, they have told that compliance testing is an important aspect, and that compliance system is now getting too much of ground and is becoming one of the important activities of any compliance officer's role. So what is being done in compliance testing is, obviously we make a checklist of we pick up any activity. For example, we pick up, now there is a regulation of on operations. Now there is a PPH, policyholder protection guidelines. Suppose we pick up policyholder protection guidelines. So we see that what are the mandates of those regulations, prepare a list, then the questionnaires are being made. The questionnaires is put out to the department. Then we say that what kind of data is required, supportings are required. Then those kind of data and supportings are being obtained from them. And that supporting and data is being verified, and then a report is being made. This process is so critically done. It's been done like how an internal auditor does, or how auditors of the regulators who comes to inspect the company, that is being done. For example, even to give it more formal look, even companies do represent or present their compliance testing plan to the audit committee or to the PPH committee, that is policy reproduction committee, to say that this is, and the report and the findings are being presented to the board with clear defined timelines. Now, this acts very much as a assurance to the management that there are no surprises. So it should not happen that tomorrow there is an inspection from the regulator side. Something should not come as a surprise that we don't know. So that acts as a very first line of defense as far as compliance uh, governance structure is concerned. Compliance testing plays a very important role in the entire process. Now, obviously, one more biggest mandate of compliance officer is to ensure that the insurance company is not being abused for the money laundering purpose. So it has to ensure that the implementation of AML norms is being done properly into the insurance company. There is an AML policy. The AML policy is board approved, and there is a proper training process that happens both to the employees, agents, and the intermediaries. Then third part is that whatever transaction happens with the company, there is a proper due diligence happening of the transaction, means proper KYC documents are being obtained, and there is proper analysis of all the transactions, and there is a risk framework applied to what level of due diligence has to be done, like for low ticket size customer, mid ticket or high ticket size customer. So those kind of diligences are working. Data is being available. Data is being analyzed properly by the compliance staff. In case there are reportable transactions, those reportable transactions are being checked, validated correctly, and those transaction, and if there is any red flag or in case there is a suspicious transaction, it gets reported to FIU and Delhi. So even that is also one of the very important piece of the compliance function that has to be done. And very foremost thing is compliance officer has to be in discussion with the regulator. They have to ensure that they maintain a very cordial relation. They know about what's happening in the authorities' place, like what kind of regulations are coming, how that can impact the company, what are the how the regulatory map is changing. So even that is, and to give that kind of intelligence to the senior management on timely basis, so that there is an understanding. So that happens. But much before that, it becomes very important that there has to be a proper market conduct practices also uh, uh, implemented in the insurance company, and compliance plays a very big role. Compliance is not about just doing acting as a policeman, or maybe I would say as a field in the uh, maybe as a this thing in the football match. Compliance has to also play a very proactive role in terms of reaching out to its customers. Who are its customers? Are basically internal people from other departments. So compliance has to update all the technicalities. Means it has to educate the internal customers, like the operations, the agents. It has to go out to the branches, educate them. These are the regulations. Now, no doubt these regulations are very much a boring subject, but it has to make it so lively that it's enjoyed, understood. It should not be too technical when you're talking to the people on the ground. It has to be communicated in a very simple language. Once the agents or those people understand the importance of the compliance and they know their regulations well, that would help compliance reach its goal of ensuring a better governance structure or governance framework in the company. So if you ask me, there is compliance testing, there is compliance checking, there is compliance checklist, there is views that are being given by the compliance officer on many business decisions, business practices. But everything set aside, the first thing that starts is the training piece. One has to, every company and a compliance officer has to spend time training the people, talking to the people, That is where the compliance officer comes to know like what's happening on the ground, like how things are moving. To even these kind of informal channels gives information so fast, which helps compliance officer to ensure that there is no red alert or there is no surprise. And that is how one has to go. Compliance officer don't have to sit in the office necessarily. It has to go to the branches, talk to the branch and the people, connect with them, educate them, understand their business, try to see how things are at branch, how things are moving. Even it has to understand more business, more like how customers, what set of customers the insurer or the insurance company is having, understand the business analytics reports, read through those reports. Even that gives a lot of insight, like which area. It may so happen that a person may have get lot of cash from borderline states, which can have a AML risk. They may be low profile customers, but one would see initially that all cash is coming. So those kind of things, which are not available immediately from any reports. It takes time for data to come out, but a sharp understanding or review of business or talking to the people would throw a lot of information which can help a compliance officer meet its objective. So that is a role in brief as far as chief compliance officer is concerned. No doubt, it's becoming a very nowadays. It's a insurance industry compliance role is getting matured. Earlier, it was more of a combined department. Now it's becoming a very independent function. Uh, Management or the board is looking at compliance officers that they support, they help creating a good compliance culture within the company so that there are no surprises, there are no red alerts, and the board and the senior management is not taken by the surprise. So they are creating those kind of culture. There is tone being set at the top that we have to promote compliance department per se. And chartered accountants plays a very important role because of the skill set they have or they possess through their education. It's more like an audit to understand, to be proactive, data analytics, the ability of a chartered accountant to understand financial statements, to read through those n number of data. So that makes them quite this thing, more better person to do compliance. And that is basic from my side. If there are any questions, please let me know. Hello.
Yes, sir. Yes, sir. Thank you so much, sir. There are few questions in the chat box. I'll read it one by one. Sir, it's a general question. In order to develop insurance products by CAs, how do we go about that challenge?
See, what happens as far as insurance products are concerned, it's a domain of an actuary. Developing an insurance product is not an everyone's baby. There are properly qualified actuaries who develop an insurance product. Lot of rigor, lot of assumptions, lot of statistical analysis has to be done. Actuary in itself is a science altogether. But taking forward your question, if I see at the current market trend, many chartered, see actually, if you see the entire India, there are only 435, 40 actuaries in the entire India, qualified actuaries. But the propensity of chartered accountants becoming actuary is very high because a chartered accountant is able to understand numbers far better than any other person or any other professional person. So that is how it is. On the GI side, in product construction, chartered accountants do play a better role because every product has, on the general insurance side, lot of risk analysis has to be done, wherein the chartered accountants plays a major role. So on the general insurance, you will find many chartered accountants engaged in the product side or in the underwriting side, more from the risk perspective to analyze the risk and to give it an outlook. So on the GI, better side, but even on the reinsurance side also, chartered accountants play because preparing a reinsurance contract, a lot of data analytics goes in that. So their chartered accounts plays a big role. But on the life side, The product construction, everything is done more on the actual side.
Okay, sir. Okay. Sir, moving to the next question. How do compliance challenges differ between long-term insurance companies versus short-term insurance companies like motor vehicle, fire, and parrot?
Last part of the question I have not understood, ma'am.
I'll repeat it. How do compliance challenges differ between long-term insurance companies versus short-term insurance companies?
See, there is in insurance, there is nothing like short term or long term. Like Mr. Sundar was also
Yes, sir.
stating,
Yes, sir. Already.
insurance is about long term businesses.
Yes, sir.
So everything has to be long term. There is nothing like short term risk. For
Okay.
example, in life, if you see, a simple contract runs for 25, 30, 35 years. So the assumptions of interest rate risk that happens, that is from that kind of foresightness. Like, and actually, when it makes the product, it has to map the present cost of the future value of the present cost over 25, 30 years. What will the interest cost? So that is how they do it. There is nothing, there is no product, there is no short-term insurance concept as such in insurance. In the GI side, you may find some products which are like for 1 year. You may find a two-wheeler for 3 years or something like for four-wheelers for 4 to 5 years. There it has, or even for health, you may find a long-term health insurance contracts. So those are there, but not per se. There is no insurance company per se which is short-term or which is long-term. Every insurance company is for long-term. And one more thing, I was listening to your conversation between you and Sundar. Just to clarify, an insurance company cannot be liquidated. It is there, basically it is there in the Insurance Act per se that you can't liquidate an insurance company. And every insurance company has to fulfill the last contract it has committed to its customer as long as the customer is paying the premium. So insurer can be merged with any other insurance company. That is only the option available. It can't be liquidated.
Okay, sir. Okay.
That is part of the Insurance Act per se.
Okay. So there's one question related to reinsurance. If you want to answer is whether reinsurance has to be done through GIC or the insured can do it directly with the reinsurers. What is the role of GIC?
In case of reinsurer, there are particularly what happens is the insurance companies, GI companies can be reinsurer as far as the GI part is concerned, the general part is concerned. Life companies cannot be the reinsurer. It has to go to those allowed reinsurance companies. What happens, IRDA also approves reinsurers. So there is for Indian insurance companies, they have given certain set of quota. There is a quota system available. So every insurer, whenever it goes to the reinsurer, it has to give first set of quota with the Indian companies, then it can go back, then it can give it to the foreign reinsurer. So that kind of, it has to be there in your reinsurance policy also. So it's a very technical subject. I would like to save it on for this time.
Yes, sir. So in the continuation of the same question, what is the role of GIC in this case of a claim if the insured directly approaches reinsurers for placement of cover, where GIC accepted such placement of reinsurance cover?
See what happens, insurance companies, whether it's a life, non-life or health, they are the first underwriters as far as policy is concerned. Then these policies are reinsured with the reinsurers. So they accept a risk. Like every insurance company would consider that we will write a risk to the extent of particular. For example, if sum assured is 1,000 rupees, I'm just taking an example. Every insurance company would say that I will underwrite the risk itself to the extent of 200 rupees. Then 800 rupees it will reinsure. So whatever underwriting norms, what reinsurer does gets reflected in the products. So that is how the company has to sell. So that is how the combination works.
Okay. So next question is, you have talked about reinsurance, but we are unable to fathom many great reinsurance companies in India facilitating any international life or health, or even general insurance companies, or even insurance products. Your views, please.
I'm not able to hear you, ma'am, clearly.
So I'll repeat it. You have talked about reinsurance, but we are unable to fathom any great reinsurance companies in India facilitating any international life, health, or general insurance companies, or even insurance products. They're asking about the views. Your views, sir.
Indian reinsurance company is not going internationally. I would not say that. If you see GIC or National, they have got, suppose if I take marine insurance, so they do ride business of international level, like oil rigs are concerned, like ships are concerned. If there is suppose in case of marine or aeroplanes or airports, uh, every insurance, every company in itself is not financially capable of writing the entire risk. So what happens? There is a consortium that is formed. Like any company has to given a big loan. So there is a consortium of banks.
Yes.
There is a consortium of reinsurers who goes and bids, and that risk is taken together. So given state companies also play a part as far as international business is concerned. So there is a participation by the Indian reinsurers, the state companies in the international business.
Okay, sir. Okay. Sir, thank you so much. Moving to the next question. Can insurance be made compulsory like in Motor Vehicles Act? Why is it still optional for both health and life?
That is a regulator's mandate. I agree.
Right.
For
Sir.
motor vehicle, it's mandatory, and that helps do the business as far as motor is concerned. But I hope with the present government, it's basically self reinsurance. It's like if you see internationally also, health and life is not mandatory; it's optional.
Yes, sir.
Many regimes like UK, US, Europe, if you see US also see, it's not mandatory, but health is mandatory in some countries.
Yes, sir. Yes, sir.
It's given by the government itself.
Yes, yes.
But here in India, that development has still not happened, and I don't foresee that coming immediately. But one better side is happening is because of development activities being taken by the authority, and like I said, what authority are making a change in the present regime as far as regulations are concerned to increase the penetration. These efforts, I would say, would lead to more acceptance of health business, health insurance, and the life insurance. Like if you say that earlier, no one used to buy term products. Now everyone is buying term products, and at a very early stage. And even if you see health, the day by day, the cost of health is increasing. So the first thing one asks is whether you have a health insurance or not. Those kind of ecosystem is enabling these products to get their proper market share and increase the penetration and increase acceptance. So that mindset is changing.
Okay.
But getting mandatory, I don't think it will become a norm of a day. But I would say central government is pushing for health insurance through banking channels like Pradhan Mantri Yojana and all those things, PM, JJY and all those things, wherein free cover at a very nominal cost of 2.5 lakh rupees. Those things are happening. So I think that those efforts would go a long way.
Okay, sir. Okay. Thank you so much, sir. Sir, last question for you. Role of CAs playing as a proxy, as agents for insurance companies. Is there any benefit in continuing to do so, as there is no
chartered
direct
accountants? It is a big strength for a chartered accountant, because if you see, a chartered accountant does investment planning or risk planning for many individuals and high net worth individuals and everyone. If the kind of understanding or depth they have of their client, no other professional would have that. So definitely in doing a proper risk analysis of a customer, more from his investment side. Today there is a health risk also. Like you don't know in today's world how long you will be there in your business, you don't know. Now, suppose a chartered accountant is there, he is having a customer who is having a person who is key man. And if that key man, you have got key man policies, something happens to the business can't go downstairs. So a chartered accountant can propose, like, since you are a main key man, if something happens, there should not be loss of a business. So you can buy a key man, key person policy, which is sum assured of very high amount at a very I would say reasonable premium. So, given the profile of a chartered accountant, definitely he can play a better role and contribute to the insurance and be a risk and help person average out his risk or reverse his risk.
Thank you, sir. Thank you so much.
Thank you, ma'am. Thanks a
It
lot.
was very knowledgeable session, sir, and you have done it without PPT. Hats off to you, sir. Thank you
Thank
so
you,
much.
ma'am. Thanks a lot.
Now moving to the next part, we have resource person CA Mayank Tandon. He is the CFO of Scorse India Limited, and he is qualified CA in 2003. He has done DISA from ICI and diploma in IFRS from ICCA UK, with more than 19 years of professional experience, out of which last 16 years of experience is in insurance and reinsurance sector. Now I invite CA Mayank Tandon, sir, to give his deliberation on the topic risk management in reinsurance sector. Over to you, sir. Mayank Tandon, sir.
Thank you, ma'am. Thank you so much. Can you hear me properly?
Yes, sir. Yes, sir. But I can't
Okay.
see you.
Yes, ma'am. I have not switched on my video because
Okay.
Wi-Fi is down at my side.
Okay.
So I am connected through mobile hotspot, and I'll not be sharing the presentation to avoid data loss so that people can hear me properly.
Okay, sir. Okay.
I'll go through the presentation which I have. I'll go through the agenda. So the topic for today is risk management in reinsurance, importance of risk culture in risk management.
Okay, sir.
The agenda which I have is 4 agendas. The first agenda is risk culture, what and why. The second agenda item which I want to present today is regulatory developments in APAC region. And the third agenda item which I want to present is challenges and influences. And the fourth agenda item is fundamentals for a strong risk culture. So I'll go to the first part, risk culture. What is risk culture? Risk culture is, I have not shared because I want to save on the data because I've connected through my mobile hotspot. Wi-Fi is down. So I'm taking it through orally. So risk culture, what I want to say is having a correct attitude towards risk management. It should not happen that when an event has happened and after that we are seeing why risk was not properly managed. It should be embedded, is what I feel, in the running of an organization, the day-to-day running of the organization. Risk should be properly monitored, managed, and evaluated. So it should not happen that after an event has happened, we try to find what has happened, why it has happened. It should be monitored on a daily basis, and this should be embedded in the culture of the organization. This is called risk culture. That having correct attitude towards the risk management, it should be in your day-to-day running of an organization. Why risk culture matters is organizations face risk. Appropriate mechanism and approaches are developed to help manage risk in a systematic and comprehensive way, is what I feel. Strong risk culture enables organizations to proactively identify opportunities or risk, evaluate options, and take actions to seize the initiative or minimize any economic loss. Due to strong risk culture, people can minimize their economic loss. Financial risk in the past found to be caused by failure of the organization's risk culture, resulting in excessive and uncontrolled risk. Many organizations fail to have a proper risk management system, proper risk culture, and due to which they suffered huge losses. Like few examples are there: Lehman Brothers, AIG, Greensill, etc. Next agenda item which I want to take is the second one is regulatory developments in Asia Pacific region. So first I want to touch with Australia, where the regulator is APRA, and there what we saw is emphasis on non-financial risk, which is called GCA, governance, culture and accountability risk. There was a royal commission into misconduct in the banking and superannuation and financial services industry. Self-assessment was done by 36 of Australia's largest banks, insurers, superannuation licenses in December 2018. Concluding, non-financial risk management requires improvement is what They did their self-assessment and found that non-financial risk management requires a lot of improvement. Accountabilities were not clear, cascading and effected enforced. Acknowledged weakness are well known and some have been long standing, which is there were weaknesses in the risk system which were known and long standing and no work was done to rectify them. Risk culture was not well understood, therefore may not be reinforcing the desired behavior. When risk culture is not properly understood by each and every person in the organization, then you cannot expect the desired behavior from the employees. Increased enforcement appetite, that is, enforcement actions taken to prevent and address serious prudential risk, whether financial, operational, or behavior, holding entities, individuals to account, and set public examples to deter future recurrence of unacceptable practices. Similarly, in Singapore, where the regulator is MAS, Culture and Conducting Steering Group was set up in 2018 between the MAS and the Association of Banks in Singapore to promote better culture and conduct among Singapore banks. I will now go to the third agenda item, which is risk culture challenges. What are the challenges in risk culture? Challenges which I feel in embedding risk management in the organization are: first, people acting as individuals and interacting in groups have different behaviors and different values. Obviously, every person has different behavior and different values. Unique perception of risk. If risk is not explained properly to the employees, then every person will have their own unique perception of risk. Groups and organizations have their own approach to risk and manage risk, which means an employee coming from old organization to new organization must understand what is the methods and approach of risk management in the new organization. Every organization and groups have their own approach to risk and manage risk. Conflicting attitude towards managing risk. You may be having some, an employee may be having some conflicting attitudes towards risk management. Influences of risk culture. What are the influences of risk culture? I would like to touch upon this. Organizational culture. System of shared values and norms that define appropriate attitude and behaviors for the organizational members. Risk culture reflects the influence of organizational culture on how risks are managed and the mechanism and techniques employed. Determines the way in which individuals and groups within an organization identify, understand, discuss, and act on the risk the organization controls and risk it takes. The last agenda item which I have is fundamentals for strong risk culture. There are three pillars which I feel. First one is leadership. Tone should be set from the top and it should flow from the bottom. This is the first fundamental for strong risk culture. Second is organization, which I'll go in detail. And the third pillar which I feel is ERM framework. So the first one, if I touch risk culture fundamentals, leadership tone from the top. Distinct tone at the top from senior management on the importance of risk management. It should be clearly explained by the top management to each and every employee. The tone should be set properly on what is the importance of risk management for the organization. Senior management's commitment should be consistent, visible, and sustained over a period of time. There should be consistent commitment of senior management towards risk management and risk culture. It should be visible to each and every employee. Each and every employee should feel that we have to properly monitor and manage the risk, and it should be sustained over a period of time. It should not happen that for 2 months an organization is focusing on risk management and risk culture and then they forget. Senior management should provide direction on how risk management can contribute to the business objectives. If you're not managing your risk properly, then there is a chance that business objectives may not be achieved. Senior management should encourage risk information and bad news to be proactively and rapidly communicated up the organization. They should encourage risk information and bad news. If there are any bad news, if employee wants to communicate to the top management, he should feel free to communicate. It should not happen that there is any loss or fraud that is happening and is not communicated properly to the senior management. Whistleblowers should be properly protected. These are the tone which leadership should set from the top. The second pillar, which for fundamentals for this culture, is organization. In organization, I would like to highlight is clear accountability and ownership for managing specific risk and risk management as a process. There should be clear accountability and ownership for managing risk. Accountability should be very, very clear. Who is accountable, who is owner, and risk management process should be properly defined and monitored and reviewed at regular intervals. Communication and review structures should be in place to ensure risk decisions are effectively reviewed at a proper periodic intervals. Strategic direction should be clearly provided by the senior management on appropriate levels of risk taking. Like an insurance and reinsurance sector, underwriters have their own powers, this much amount of contracts they can write, beyond which they have to approach their senior management. So this should be properly defined. It should not happen that a lower level officer who does not have proper knowledge binds an organization for such large risk where organization is not able to pay claims and then they go bankrupt. Sorry. The next point is the organization actively learns from adverse events where risks are not appropriately managed and celebrates and role models where risks are appropriately or successfully managed. Both plus and minus should be properly monitored within the organization. If something bad has happened, they should learn and improve their processes. If something good has happened, risk was properly monitored, losses were saved, then they should celebrate also. Risk information is communicated transparently up the organization. Organization should set up proper channels where there is no hindrance in communicating any risk information from bottom to up. If there are hindrances, then it may happen that any fraud is not communicated and the organization may have to suffer loss. There should be proper channels that communication is transparent and within the organization it is communicated to the relevant official. The last pillar and the last point in my slide is risk culture fundamentals is ERM framework, which is very, very important. Enterprise risk management framework. Boundaries of risk taking are defined and clearly articulated through a risk appetite statement, setting out the organization's risk appetite, risk tolerance, and risk limits. It should be very, very properly articulated what are the boundaries within which an organization can function. There should be proper risk appetite statements setting out the organization's risk appetite. This appetite of risk can be taken by the organization, this cannot be taken. Like in insurance and reinsurance sector, we have clear risk appetite that this aviation, like for us, we don't do aviation. This is not beyond our appetite. The premiums are very large, losses are very, very large. So this risk appetite for an organization should be properly set up. Risk tolerance and risk limits. Risk management mechanism in place to identify, access, control, and manage risk, ensuring alignment with risk appetite. There should be proper risk management mechanism, which should be in place to identify first point, to assess second point, to control third point, and to manage risk fourth point, ensuring alignment with the risk appetite. The process of risk acceptance and risk management is supported through a proper ERM framework of proper governance structure, policies, procedures, and internal controls, monitoring and reporting. The second last point in my presentation is trends and emerging risks should be properly monitored. Last point in my presentation is the ERM framework is regularly reviewed by independent parties, chartered accountants through internal audit or through statutory auditors, but should be properly reviewed by independent parties. This concludes my presentation. I'm happy to take any questions if there are.
Thank you so much, sir. I'll be taking questions one by one. So first question is how GA claims are assessed. Generally comes under a marine policy. It appears that it is a technical subject.
Yeah, ma'am. It is a technical. I'm not the person to answer
Okay.
on how claims are assessed.
Okay. So moving to the next. Is the key management personnel insurance mandated by the Companies Act? Key management personal
Key
insurance.
management personnel are mentioned also in Companies Act and also by IRDA, and specific approvals are required for appointing key managerial persons in IRDA, as regulated by the IRDA. Insurance and reinsurance companies have KMPs, and we
Mhm.
seek IRDA approval for appointment or for removals.
Okay, okay. So moving to the next, what would be the role of CRO, Chief Risk Officer, which is made mandatory? Whether inside personnel can be a CRO or an outside personnel needs to be appointed.
Ma'am, inside person and employee of the organization can be CRO, and he or she has to assess and ensure that there is a proper ERM framework, proper risk culture is there, proper risk documentations are there, they are reviewed on a regular interval, presented to the board. What are the risks, whether they are within the limits or outside the limits, and how to manage this. There's a proper presentations which happen in the board, and all insurance and reinsurance organizations are supposed to have CROs. This is very, very important nowadays. Risk management and risk monitoring is very, very important these days. And internal persons are appointed as CROs, or someone can be hired from outside, but generally CROs are employees of the organization, like CFO or like CEO. Hello.
Sorry, I got disconnected. So the question, one question is left.
Hello.
Yes, sir. Yes, sir. Sir, whether reinsurance has to be done through GIC or the insured
Ma'am,
can do it directly.
can you repeat the question?
Yes, sir. Can you hear me, sir?
Yeah, I can hear you. There was
Okay, okay,
what
okay.
happened.
Whether reinsurance has to be done through GIC or the insured can be directly with the reinsurers.
Ma'am,
Role of
reinsurance
GIC.
happens.
G.
Yeah, ma'am. So what happens is insurance companies sell policies to individuals or to corporates. Like corporates or individuals cover their risk with insurance companies approach reinsurance companies like GICD. GICD is an Indian reinsurer. Other than GIC, there are 10 foreign reinsurers who have opened branches in India. And what happens is they approach GIC, which is in the order of preference at the first level. If GIC is not able to provide reinsurance cover to insurance companies, then insurance companies approach reinsurance branches, the 10 foreign reinsurance branches which are there in India. If we are also not able to provide support, then they go to international market. There are more than 100 reinsurance companies which are called cross-border reinsurers across world, where insurance companies can take their protection. So first they approach GICD, then they approach foreign reinsurance branches, which is called FRB, and then they approach cross-border reinsurers, which are outside India.
Okay, sir. Next question is please guide on revenue recognition principles for insurance companies.
So, ma'am, for insurance companies, what happens is premium is collected before risk start. For motor, for health, that's mandated by IRDA. And as soon as you collect premium, the day when risk starts, you have to start earning the premium over the risk period. So, which is very, very fair. You have to earn the premium over the risk period. So, they take it in the gross written premium. The full premium is taken in gross written premium. And then what the companies do is they create unearned premium reserve, which is a specific term in insurance sector, which is called UPR. UPR is the same as earning premium over the risk period. So, say for example, if 3 months have expired, the policy was sold on 1st Jan, and now we are preparing a balance sheet on 31st March. So 3 months premium has been earned. For 9 months remaining premium, if assuming the insurance policy is for 1 year, 9 months remaining premium will be put in UPR. So, say for example, gross premium is 100. Uh, 3 months have expired, and 9 months UPR will be created out of that. So 100 into 9 upon 12, whatever that amount is, will stand in UPR. So gross written premium minus UPR is net earned premium. 3 months premium will be earned, and this goes over the risk period. UPR is released and earned in net earned premium.
Okay, okay, fine. Sir, next question is to whom the chief risk officer report?
ma'am, to the CEO, and also is responsible to the board also to present his presentations and to give update on risk management.
Okay, okay, sir. Okay.
He or she reports to CEO.
Okay. So next question is, what is the relevance of professional indemnity insurance? Does this really help CA in practice when in need?
Ma'am, I'm not the technical expert on this topic because I am in the reinsurance sector. So
Yes, sir,
maybe
yes, sir.
we can check with
Yes.
the technical expert.
Okay, okay, sir. Okay. Sir, last question is it mandatory for insurance to be ruled through only GIC?
It is not mandatory, ma'am. What happens is for general insurance, 4% of their risk needs to be given to GIC. Other than 4%, whatever insurance companies want to reinsure, they can approach GIC, or they can approach reinsurance branches, or they can approach CPRs.
Okay.
So there is a mandatory 4% ceding to GIC re. But other than that, if anyone wants to cede, say for example, insurance companies want to cede 30%, 4% goes to GIC, balance 26% GIC can take. If they don't want to take, reinsurance branches can do that reinsurance, or it can go to CBRs, which are across the world.
Okay, okay, okay. Thank you so much, sir. Even after all the last minute technical odds, you have made it very knowledgeable session. Thank you so much for your dedicated efforts, sir. Thank you so much.
Thank you. Thank you so much. Thank you.
Now we have come to conclude our session. Our webinar will not be complete without giving thanks to all of you. I hope what we have learned in this webinar will help us in all the aspects, and the purpose of this webinar has been completely accomplished. Finally, on behalf of the Internal Audit Standard Board of ICAI, I would like to express my appreciation to all the participants, speakers, committee members, and staff. It's been a pleasure with all of you today. Now, I officially announce the end of this session. Wishing you all a great health. Thank you so much, everyone. Good night. Thank you.